Hi, Assalamualaikum. My name is Muhammad Izzat bin Azman. So we are group 23. So we have been assigned to make a research about the FedEx corporations for our reports. So I would like to introduce my group members, which is the first one is me, Nurharris Haiqal, and then the second is Muhammad Izzat, which is me, and then the third is Muhammad Taqiyuddin, the fourth Muhammad Sabiu, the fifth is Ibrahim, and the last one is Umar Bakar. So the next is a table of content. So this is the content that will be included in our presentations today. So the first one is introductions, vision and missions, internal assessment, external assessment, spot metrics, BCG metrics, recommendation, EPS, EBIT analysis, projected financial statement, and the last one is conclusions. Assalamualaikum, my name is Muhammad Izzat bin Azman. So my major is in business administrations in human resource management. So I'm going to present about the FedEx Corporation background and the vision and mission for FedEx Corporations. So for your information, FedEx Corporation is founded in 1971 in Memphis, Tennessee, which is its leading global provider of express freight transportation services. So currently they have operation in over 220 countries, which it maintains a vast network of over 57,000 drop-off points, 700 airplanes, and 62,000 trucks, and employs over 220,000 people. Despite its significant market presence, FedEx faces strong competitions from the United Parcel Service, which reported nearly 10,000 billion more in revenue in 2014. And in April 2015, FedEx aimed to acquire Dutch company TNT Express for 4.8 billion. But unfortunately, they face regulatory challenges from the European Commission over market dominance concerns. So the next is the vision and missions for FedEx Corporations. So basically, FedEx Corporation doesn't have the clear statement about their visions, but for the mission, they have put their statement into their business websites. And what are the missions? So basically, FedEx Corporation is aimed to provide exceptional financial return to stockholders by offering high logistic and transportation services. They prioritize customer satisfaction, safety, and ethical conduct while fostering relationship with employees, partners, and suppliers. And FedEx Corporation also committed to environmental sustainability, which is they want to reduce fuel usage by 14% since 2005, which is it's aiming for a 20% reduction by 2020. They just use fuel efficient engines and strategically place hubs and optimize supply chains. So FedEx also emphasizes sustainable packaging with recycled material and manage recycling program for various material. So there is a vision that has been proposed for FedEx Corporation, and the vision is it leads to the logistics sector with care, integrity, and unwavering dedication to safety. So by doing so, it can help organization build long-lasting relationship and safety progress for all parties involved. So the choice of this vision is because it's aligned with the objectives of FedEx Corporation, which is to provide financial return to stakeholders and make customers satisfied by providing high quality service and implement a sustainable environment by reducing carbon emissions.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Muhammad Sabiu Omar. I will be discussing about the internal factors for the FedEx Corporation case study as well as the external factors. So looking at the internal factors, I will discuss about the key strengths of the FedEx. First, it has extensive global presence with operations in over 220 countries. Secondly, it has strong financial performance with the revenues of 47.4 billion in 2015. It also have innovative technology investment for operational efficiency. At the same time, also strong employee relationship and workforce of over 220,000. It also has a strong market position as one of the largest express freight delivery companies. So looking at the key weaknesses of the FedEx case studies, first, it has excess packaging materials leading to environmental concerns, and then lack of written or vision statement, limited presence in certain regions compared to competitors. Likewise, also it has limited focus on sustainability, and as well as the lack of organizational structures without popular executives titles. So that is about the key strength and also the key weaknesses based on the internal factors of the FedEx. So looking at the external factors for the FedEx Corporation, first looking at the opportunity, we have the increased demand for e-commerce and package delivery services. And the next one, also diversification into new services lines and industries, focus on customer experiences and service quality, expansion of international market for market diversification. And then the next one, looking at the threats for the FedEx Corporation, it has intense competition from its rival, which consists of UPS, USPS, and also economic downturn impacting shipping volumes, cybersecurity threat and data breaches. And then the last one is natural disaster and geographical event disrupting supply chain operations. So that is one of the key factors affecting the FedEx in terms of external factors. So coming to the internal and external metrics, first regarding the FedEx Corporation, it has division which consists of FedEx Express, FedEx Ground, FedEx Freight, FedEx Services, and FedEx Office. So looking at the FedEx Express, it has the revenues of 27,500 million with the estimated internal factor score of 3.2, while estimated external factors of 3.1. Then FedEx Ground has the revenues of 11,600 million with internal factors of 3.3 and the external factor score of 3.2. While the FedEx Freight has the revenue of 5,800 million, while the estimated internal factor score of 2.9 with external factor score of 2.8. And the next one is FedEx Services. FedEx Services has the revenue of 1,500 million with internal factor score of 3.0, while the external factor score of 2.9. And the next one is FedEx Office. FedEx Office has the revenue of 1,000 million with the internal factor score of 2.7 and the external factor score of 2.6. So this shows that FedEx Express has the higher revenues. While looking at the internal factor score and external factor score, the FedEx Ground have the higher internal factor score with 3.3, while the external factor score is 3.2. So which shows that it has a better strategy and effective services, as also the chance for the growing compared to others. While the FedEx Office has the lowest internal factor score and the external factor score, which the internal factor score is 2.7, while the external factor is 2.6, which it has to improve its strategy and also its services for better growing. Thank you. That is all from me.
Rahim. My name is Muhammad Bakri. Now we continue to SWOT metric. Strategy formulation at FedEx Corporation. Here highlight SWOT metric that focus on the strategies that are supposed to be implemented to stay competitive and grow the business. First, we have SO strategies. There are four. First, leverage extensive global presence to expand into emerging markets, demand for operational efficiencies and offering. And second is SD strategies. Firstly, branch delivery firms implement sustainability measures to comply with environmental regulation and impact. And third, WO strategies. First is invest in sustainable practice to reduce environmental impact and enhance on fuel. Second, address lower net income by diversifying into new service lines or industries. Third, improve presence in certain regions through expansion, international operation, and position. And last but not least is WT strategies. reduce high operating expense by optimizing organization structure and process, regulation, environmental standards, and efficiency. Okay, next we move to BCG metrics, which is FedEx Corporation divisional anniversary reviews from competitive positioning across the key segments. FedEx Express and Ground are close to industry leaders in revenue and market share, benefiting from robust demand driven by e-commerce growth. FedEx Freight and Service also maintain solid market position through the freight segment. Operates in a modest growth industry. Conversely, FedEx office face challenges due to low industry growth and increasing digital competition. To sustain overall growth, FedEx should continue leveraging its strength in express and ground while strategically enhance the performance of its freight and office divisions. Yeah.
Hi, my name is Muhammad. So I will explain about recommendation specific strategy and long-term objective for FedEx company. First and foremost, FedEx is prioritizing e-commerce integration and technological advancement by investing in AI and machine learning. We aim enhance package tracking, optimize delivery route, and create an integrate platform for seamless e-commerce operation. Our goal is to increase our e-commerce market share 20% within 3 years, capitalizing on the booming online retail sector. So next, FedEx must focus on increasing market share in developing nations, particularly in Southern Asian and African. This region presents substantial growth potential due to their expanding middle class and increasing demand on logistic service. We plan to establish a regional hub and logistic facility aiming for 15% increasing in revenue from emerging market over the next 5 years. This strategy will diversify our customer base and reduce dependency on established market. Strategy, connection, and collaboration are crucial for our expansion. By partnering with regional logistic firm and digital companies, we can extend our reach and enhance service offering. Our target is to improve our global market presence by 10% in 3 years, leaving our partner strength and market access. So we move to the next, which is sustainability in other key focus. We are committed to reducing our carbon footprint by incorporating more electric and fuel efficient vehicle into our fleet and increasing the use of recycled material in packaging. Our objective included using 60% recycled material in packaging and cutting carbon emissions by 30% by 2030, aligned with global sustainability trends. So to enhance overall profitability, we will streamline operation in underperforming segment like freight, logistic, and office service by conducting through studies to identify inefficiencies, implementing cost reduction measures such as process automation, and exploring new market opportunities. We aim to boost profitability in this segment by 10% in 3 years. In conclusion, these strategic initiatives are designed to leverage FedEx existing strength, address weakness, and size opportunity in emerging market, and advanced technology. By focusing on this goal, FedEx can ensure sustained leadership and grow in the global logistics sector. Thank you. That's all from me.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurharris Haiqal and I will be explaining about EPS EBIT analysis. So FedEx EPS EBIT research examines how common stock and debt financing affect EPS under pessimistic, realistic and also optimistic scenarios. So for the common stock financing, it has an EPS range of 1.79 to 8.96 dollars, while debt financing has 1.13 to 10.19 dollars. Debt financing has interest costs but may boost EPS owing to leverage, especially in positive situation. However, common stock financing, which is safer and interest-free, it increases profits per share a bit. The graph shows that debt financing boosts EPS more as EBIT rises. Debt financing has a higher risk-reward ratio than equity. This study is crucial to FedEx capital structure strategy. Risk, cost, return trade-offs must be carefully considered.
Assalamualaikum warahmatullahi wabarakatuh. My name is Haiqal, and I will discuss on the project financial statement. So based on the recommendations provided, we can see the increase in revenue, which increased from 49.8 billion in 2016 to 57.6 billion in 2018, which reflects the improvement on e-commerce integration and expansion into emerging markets. Rise in cost of goods sold aligns with the setup of new regional hubs and logistic facilities to support their expansion. Gross profit is attributed to technological advancement and market expansion effort. Higher operating expenses are due to significant investment in technologies and sustainable practices. The increase in the EBIT shows the positive impact of cost reduction measures and also improved operational efficiency in underperforming segments. The rise in interest expenses is due to the increased long-term debt taken on to finance expansions and technological upgrade. So consequently, the increase in net income demonstrates the overall success of these strategic initiatives in boosting their revenue, managing costs, and also enhancing the operational efficiency of FedEx. Moving on to the project financial planning sheet, we can see that capital surplus is expected to rise due to new equity investment and strategic initiatives and increasing paid-in capital. The long-term debt will likely increase as FedEx secures financing for technological advancement, market expansion, and sustainable projects. And also property, plant and equipment, which is PP and E, will also increase due to investment in new regional hubs, logistics centers and technological infrastructure. This demonstrates significant capital expenditure aimed at enhancing market presence and also operational efficiency for FedEx.
In conclusion, FedEx Corporation, a global leader in logistics and also transportation services, faces significant competition and regulatory challenges despite its extensive network and also substantial market presence. Our analysis highlighted the company's strengths in its global reach and technological advancements, but also underscored areas needing improvement such as operational efficiency and also market expansion. To maintain its competitive edge, we recommend enhancing e-commerce integration, expanding into emerging markets, forming strategic partnerships, and also investing in sustainability. By implementing these strategies, FedEx can improve market share, boost revenue, and also achieve long-term growth while maintaining its commitment to environmental responsibility. These steps will position FedEx to better navigate the dynamic logistics industry and also secure its leadership for the future. That's all from us. Thank you.